Thank you, Jane King. Time now to get to the big story breakdown, as evidenced by all of the presents, under the Christmas tree and the stuffed stockings hung with care above the chimney. Santa Claus did come to town this Christmas, but investors now eagerly watching to see if old Saint Nick will leave behind his famous Santa Claus rally in the next week or so here on Wall Street. We could certainly say there's a rally in precious metals. Silver is going parabolic. Growing concerns of a global supply shortage, and China set to restrict exports in the new year. Joining me for one final time for what a year it has been in 2025, the great Peter Tuchman, senior floor trader at TradeMas, the Einstein of Wall Street. My man, thanks for being here.
Absolute pleasure, sir.
So, Santa Claus rally, we love talking about it. Final 5 of the year, plus the first 2 trading days of the new year. What are you looking for in the next few sessions to give you a sense on effectively how we close out another double-digit gain year?
Gotcha. It is amazing if you think about it since 2020, since COVID, right? We were up 20% in 2020. We were up 21% in 2021. We had a pullback in 22 because of all the money that we've been printing. 23, 24, double-digit, over 20% growth, and now we are closing out the year so, short of a disaster, a major rally, around 17%. You described it. 14% on the Dow, 17 to 18% on the S&P, 22% on the Nasdaq. These are numbers, record highs in precious metals, up 170% on silver. I mean, the enthusiasm, the excitement, the fact that, I attribute it to lots of things. Everything possible that could be thrown at a market this year has been thrown at this market. Yet we're closing out with 52 record highs this year. Okay, think about it. We started off the year with a new administration. Then we had that mini crash, February, March, and April. And then we had Independence Day. Then we had the tariffs. Then we had sort of the summer of love. That was sort of around lower interest rates. It was questionable. It was a rough little time. And then we started to cut interest rates. And we had a government shutdown, a government government reopening. And then we had that blackout on economic data. Then we had really good numbers at Thanksgiving. I mean, I just gave you the year in a bullet, right? And yet, if we were sitting here with the market down 7%, I could still be able to explain, and it would make sense to you. But we're not. We're up 17%, and the year is so resilient. And there are so many different new investors in this market. I think one of the biggest attributing factors to it is that retail money is now smart money. And that I don't just say that flippantly because, I analyze that kind of thing. That's what I do. But they were the ones buying the dip in February, March, April. They were the ones who were also buying the dip in November, right? When the AI bubble, that narrative started to come around. And so that's wonderful. That gives me a sense that there's hope for the next generation, which is a big, you and I talk about all the time, that we're here to inspire and motivate the next generation of investors. So is Santa Claus coming to town? He's already come to town. Do we get a fun little boost up to 7,000 on the S&P? That would be great. Then I would be able to give out my hats, But my gut is yes. I'm hoping that we close out the year at the high of the year.
Yeah, you mentioned the success and the surge of retail investors, maybe over institutional dollars, at least around those Monday, April 7th lows. We know that retail investors, they like tech, they like discretionary, they like some of the shiny things. They also really like metals, another shiny thing. Yep. What do you make of this incredible performance, not just precious metals, but some key industrial names like silver?
You know what? I find it extraordinary. I really think that people are liking to buy things that, first of all, get a very quick return on investment. This is where else do you go? And so they're watching it, right? Their eyes weren't on everything stock market, right? And so when you see this incredible surge, up 170% in silver in a short period of time, right? And we've seen an incredible rise in gold. For me, it's basically people they're buying everything that's not locked down. Right, the only thing they're not buying is Bitcoin, and that's a much longer story, and that's a function of a lot of big major margin calls, a couple of big bets against it, and also think about it too that a lot of the most recent tranche of people who got into Bitcoin was at around this price, the 87,000 level around in April, and a lot of it was bought on high margins, and then when it comes back to the price where you bought it, there's a margin call. And when people need to raise capital, they don't want to give up what they bought, so they sell the outperformers of the year, which was tech, right? And that was that pressure that you saw come into Palantir on the great earnings day they had on November 3rd, and NVIDIA as well under a lot of pressure. I mean, think about it. Everybody from the guy selling hot dogs on Broad Street to the Uber driver to a billionaire knows about NVIDIA. We don't have Oscar watching parties anymore. We have NVIDIA earnings parties, right? So the world, we're in the middle of this wild vortex that's amazing, and it's all good.
Yeah.
It's all good.
Historically, we talk about the highs and lows of the 4-year cycle. The midterm year can be choppy. The Stock Traders Almanac tells us Q2 and Q3 of a midterm year can be some choppiness, which sets up the historic sweet spot. After we get the result of the midterm election, people are expecting a swing back into the Democratic column. How closely do you track those historical patterns, especially coming off of what's set to be a third consecutive year of double-digit gains?
I do track it a little bit, but as you and I have also spoken about a lot this year, that seasonality is really no longer something that's as easily trackable as it hasn't been in the past. Sell in May and go away, sell on Yom Kippur, on Rosh Hashanah, buy on Yom Kippur, and all these old Wall Street adages that are wonderful, and they're fun, and sometimes they've worked for decades. Seasonality did not. September and October are normally softer months. This year they were super strong. November is the most robust month of the year. This time it was soft. So you know what? There's so many moving parts, and I think that the retail investor has also thrown a little bit of a wrench, a good wrench, but a wrench into that whole story, because people are not. The people who are the young new retail investors looking for alternate investments or ETFs or gold and silver or even Bitcoin, I would say, are not looking at the midterms to make a judgment whether they're going to buy relative to that. That's a little more of an intellectual understanding of markets, in my opinion. I think we've got a lot of new young people who are emotionally involved in the market in a mature way, right? But in a good way. And so I tend to think that they're not going to be as much phased by that midterm description seasonality you just described.
Happy New Year. We'll see you for Nelly on Wednesday.
Absolutely. Stay tuned. It's been a pleasure, and we had a great year here at FinTech. FinTech's the best Mondays and Fridays with this team. Couldn't be better. I'm a happy camper.
As are we. The great Peter Tuchman, senior floor trader for TradeMas. Einstein, thank you.
My pleasure.